Yo, what's going on, everybody? Welcome back to another episode of Learning Lectures. This is episode 7. Uh, this episode is going to be a little bit all over the place, and I do apologize for that. As you can see, I have hiccups. I'm dehydrated, and I'm on a schedule. So this video is about an hour long. Excuse me again. This video is about an hour long, and I only have about 30 minutes to spare right now. So I'm going to cut it up into 2 sessions. It's going to be one video, but it's going to be two different times of the day. So I'll most likely rewind just a little bit after 33 minutes into the video, and then I'll continue on with the lecture. But I am on a tight schedule right now, so sorry about that, but this is going to be the only video that I know right now that I'm going to schedule like this. Hopefully the hiccup stops soon, but let's get this going.
Hi, folks, welcome back. This is episode number 10 of the 2022 ICT Mentorship for the YouTube channel. This lecture is going to be teaching implementing economic calendar events with the open. All right, so the economic calendar, many of you probably don't even consider back. This is
I don't know what it is. Like I decided to recorded the morning session, right? Got ready, and now my body just starts to start dying. Like I'm coughing, I got hiccups. I don't know. I don't understand what's going on. I'm getting ready for the rest of the day, but damn, man. I do apologize. No way, I don't have any pens. I only have pencils. What? Who the fuck took my pen? That's crazy. Like I said, this video is already off to a rocky start, but today's episode, what I say, it was 7. Episode 7. So we're going to be talking about implementing economic calendar events with the open. All right, so let me go ahead and write all that down. I might just mute myself, honestly, because this is disgusting. From just from the title, I'm assuming that we're going to be talking about holidays and whatever news is coming out, like CPI numbers or anything like that. We're going to be discussing that and how it affects the 930 price.
episode number 10 of the 2022 ICT Mentorship for the YouTube channel. This lecture is going to be teaching implementing economic calendar events with the open. All right, so the economic calendar, many of you probably don't even
Forexfactory.com. Make note of that. It's kind of like what happened this morning. If you did watch the morning session that I posted today as well, um, and yesterday too. I didn't upload yesterday's morning session, but really it's just respecting the retail's support and support and resistance. This support is the resistance. Price couldn't push it above, and it just failed and came down. And really the same thing. I thought price was going to go higher today. It didn't. It hit. Oh my god! It hit a resistance, and then it proceeded to come down. I had to get in on a fair value gap retracement.
Is accumulation.
Okay, just so I get this straight, he said from the day that it opens, right? On the daily when it opens up to its high, if you were to subtract that, no, he said subtract. That's what got me a little confused. But my take is from the open to the high, the amount of points is gonna be where the fair value gap is on the bottom. That's pretty fucking crazy. If that's real, I'm gonna write that shit down so I can back test. Daily open and daily high. How many points? See if fair value gap is there from that's actually really fucking crazy if that's
I
real.
say opening range, that's opening range. So what that does is gives me an area in which to bracket out how much leeway I can give the market when it starts to go below the opening price and still take
no
favorable entry. Because power 3 is I'm bearish. You don't need
I don't
that.
even know what that
Okay.
is. All right, I'll be back. You are still gonna watch the same video. Quick little intermission, go ahead and use the bathroom. Do what you gotta do. Cause I'll be right fucking back. Right back. So we're back, we're ready. Let's get it going. You know what I'm saying? Let's continue. Pick up where we started.
It doesn't really give you
Pick up where we
that
left off.
organic feel of the candlesticks actually forming real time. Whereas if you recorded your screen doing it, then there it is. Don't worry about your screen burn-in time either. Camtasia will record the screen. If your screen protector comes on and it like goes blank, it'll still record the screen. All right, so we're looking at the opening price here, and then we're expecting a sell to form. Well, here's that fair value gap. It rallies up into that. Isn't that a sell above the opening price? Yep. Sure is. From that opening price to that high, that's the highest high. Take that range and subtract it from the opening price. That's about in this vicinity here. Okay, right in there.
I'm still blown away. Like, that's actually super crazy that nobody talks about shit like that.
So what's occurring? Well, we have this sell here. Then we have this sell here at the equities opening. And then we have this imbalance in here. So from this range high to that low, multiply that by 2 as a projection. In other words, whatever that low is to that high, that much lower, you'll expect to see a short. And it forms right here. That's exactly what I taught you. I did not cherry pick that, folks. You can go back and look at data as long as you can find data on daily charts, okay? And if you can get a intraday chart, like an hourly chart, you'll see it, it's there. But this is a 15-minute time frame. That's my bellwether chart. That's what I teach all my students. This is the one you go to for day trades and or scalps. You can find everything for intraday trading on a 15-minute time frame. If I was held to a decision of what time frame would you be forced to trade with if you had to pick just one ICT, the 15-minute time frame, because I can do anything with that 15-minute time frame. I can swing trade, I can short-term trade, I can day trade, I can scalp. But you only need to have one discipline, one way of doing it. And you might not like the 15-minute time frame. You might like the 1-minute chart if you're trading indices. But you have to have the storyline of the 15-minute time frame.
I like 15
to get the full panoramic view of what prices like to do. So
and the daily
with this continued
and the hour
teaching here, right below here, what's that?
and the 4 hour.
That's sell side liquidity, relative equal lows.
What was the trick? It was one. So this has nothing to do with ICT, and I haven't back tested this in a while. But what I used to do was go on the 4 hour chart, and I'd look at the candles for now specifically. I'd look at the candles at 1 a.m., 5 a.m., and 9 p.m. and 9 a.m. Sorry, 1 a.m., 5 a.m., 9 a.m. And with the 3 candle sequence, it's a little bit different from how ICT does it, but because I learned it from a retail trader. But and he's super successful. But yeah, so it's like bull, 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 or be bull, bear, bull, and it's just like patterns like that. And so I would always look at the 4 hour 159, and if it's a bull, 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 I know we're gonna reject and then come up. It's just like an overall pattern for the day type shit, if that makes sense. But don't worry about that shit though. We're not learning that. I just wanted to throw it out there for no reason.
So you can test this on your own chart. I omitted it by mistake. I apologize, but the low on this candle here is 14,381 even. Okay, don't take my word for it. Go look at your own chart. It's there. So 14,381. I would have preferred to include a line projecting that out in time, because you'll see in a moment when we drop down to the lower time frame. But the setups are forming here above the opening price, right here near the opening price. See that? And inside of the range from the high to the opening projected down, it's really in that vicinity there. So it's giving you another opportunity. So again, what's occurred is we went up into that fair value gap on the daily chart. We're back on the daily chart again. And we're anticipating the opening and rallying up into what? Maybe the high end of that fair value gap, or something forming at the news release at 8:30. But if we look at price, price was starting to pump up higher ahead of the 8:30 news release. So what's that tipping its hand to you, telling you? They're pricing in a premium market ahead of the news. So they're going to use the news to sink it lower because the bearish bias is going to come into fruition. They're going to expand price lower, and they've already established their shorts because they accumulated above the opening price. And we can see that in the price action of each little short-term rally up, like we're looking at here. So here's 7 o'clock in the morning. It rallies above these relative equal highs and cleans up the imbalance here. And look at that right there. See that? Remember what I told you? If there's two fair value gaps, try to trade it in here, but anticipate and use the money management to allow for your stop to weather a run up into that. And we got it right there. Now, strip it down to what I taught you for the structure of the trade or the framework. Swing high, broken to the upside, taking out buy stops. So buy side liquidity is taken. Then we have a swing low. It's broken. Did these candles come down lethargically? Was it like a slow meander decline?
I don't know.
It was sudden.
Yeah.
It was a lot of momentum. It was energetic. You can't miss those down close candles right there. That's obvious. They stand out, right? So that's how you know you have a shift in market structure. In this area here, it doesn't have a fair value gap. That's okay. This is only a 5-minute chart. This is where we start doing a top-down strip of 5-minute, 4-minute, 3-minute, 2-minute, 1 minute. The first fair value gap we come to, if we find one on a 4-minute, you don't need to go down to a 3. You don't need to go down to a 2. You don't need to go down to a 1. If you go down to a 4, you don't see one, you go down to a 3. If you find one there, you don't go any lower. Okay? If you don't find one on the 5, the 4, or the 3, and you go down to the 2-minute, and you find it there, that's it. You don't go down to the 1 minute. If you don't find it on the 2-minute, and you do find it on the 1 minute, then that's how you trade it. But what if you don't have one on the 1 minute chart? You don't have a trade. How's that for logic? So we have
Fair value gaps are entries. I said it earlier. I don't know if it was this video or in the mornings with Mike, but I definitely said it earlier. Fair value gaps are my entries.
the continuation lower off of a retracement in here. Now this candle, the high of it here, I wish I would have used a lighter color, but this candle's high is right there, okay? It actually goes just above that one right there. Not by much, but it does. But we don't need that. We don't need that. Watch what happens. Here's the 4-minute chart. Uh-oh, something different on this chart, ain't it? We have buy side liquidity here. The candles are a little bit more beefier when we were looking at the previous slide. Look at this one. Look at the candles, look wonky, don't they? But on this time frame, they become much more prominent, more beefy, much more stout. Like, look at me, I'm here. Take a look at me. That's what we're looking for. We're looking for clean price action where we can see the nice candlestick formations, where we're seeing the even distribution of the price going higher or lower, in this case going lower, but we're seeing that little break where there's not an even distribution of price. That's the fair value gap. So we have that run above buy side liquidity. After rebalancing over here, it goes above it and it breaks down. So we have an idea, okay, we could potentially see a trade short here. I like this fair value gap, but we also have a little bit of imbalance in here. So I want to trade in here, but my money management has to permit me to weather a run up into this area too. Remember that, that's part of the rules. But in here, we're going a little bit deeper. In my YouTube channel, I teach a breaker pattern, okay? And that is a high, a low, and a higher high. That's what this pattern is here, and we're seeing that return here. So if I see a breaker like this, yes, I think the market could potentially trade up into here, but I'm going to use the breaker's candle and just above that for my stop. So I'm not going to go way up here or way up in here, because my foundation to teaching the ICT breaker is the market's going to mostly stay in the lower half of the breaker candle, which is the down. Down close candle right for the big move. Up higher, taking out a short-term high. Trust me, the breaker is taught in the YouTube channel in other lessons. I'm not going to pour myself over top of lessons and regurgitate things, because if I see a breaker like this, yes, I think the market could potentially trade up into here, but I'm going to use the breaker's candle and just above that for my stop. So I'm not going to go way up here or way up in here, because my foundation to teaching the ICT breaker is the market's going to mostly stay in the lower half of the breaker candle, which is the down close candle right for the big move. Up higher, taking out a short-term high. Trust me, the breaker is taught in the YouTube channel in other lessons. I'm not going to pour myself over top of lessons and regurgitate things, because there's a lot of you that have been training with me for a long time and you don't want to go through that. And the new people that are here, I understand your enthusiasm and you want to know everything like a sponge. I get it and I love it. But trust me when I tell you, that is taught in the free lessons in this YouTube channel. Okay, just remember it's a bearish breaker, and that pattern is the support structure of why I would not expect it to have a higher stop up here. Okay, so here's the fair value gap range from the low and the high end, but it's specifically this candle's low and this candle's high right there. Extend it out in time. Look what happens. At 8:28, the candle's showing 8:28 here because it's a 4-minute chart. But once we're trading inside here, all I need to do is trade above this candle's high. I want to be short. I don't want to mess around. It might not give me an opportunity to get in. It might not go higher up into that fair value gap. I want to use the easiest, lowest threshold entry technique to get in to make sure I'm a part of the move. Then I'm going to be aiming for those relative equal lows. That's that 14381 level, 14,381. Remember that relative equal lows? I said, I wish I would have put a line on it. This is the time frame I added the line. It's the 4-minute chart. Now, if you look real close, you can see there's a little tiny little arrow right there and a bunch of them over here. What that is TradingView's paper trading module. And I put some short on this today to illustrate what many of you have been asking me in TradingView comment section. A lot of you send me comments through TradingView. A lot of them usually that happen, and I just don't get to them. I'm sorry. I'm not purposely trying to ignore you. It's like Telegram. Telegram, people send me messages there too, and I don't have time to go through it. Emails, absolutely, I don't have a whole lot of time to get through, because everybody wants to write a long story to me, and I appreciate them, but I can't sit there all day long and read all that. But the idea of showing what a discount broker margin, what could I do with that? Okay, I don't recommend it, but there are brokers out there that will allow you to trade the mini contract for just a couple $1,000 and the micro for less than $100. And to me, that is absolutely stupid.
Damn.
You're asking to blow the account. In these markets, you absolutely can have your hinder parts handed to you in short, sudden fashion. Even me, in the last, 4 weeks or so, I've seen moves that came back on my stop so fast. I was like, wow. Just the other day, I watched a 100-point run come out of nowhere in a 1-minute candle. It moved 100 points in the NASDAQ. 1 minute. That's a lot of movement, man. So if you're looking at that and you're trying to hold, let's say, 16 minis or 8 minis, and it moves $2,000 against you in 1 minute, folks, your stop would not have been respected.
That's tough.
It was literally way above your stop loss if you were using one, okay? So you would have got stopped out with negative slippage. And let's say you were holding those 8 contracts. Well, let's say you got burned for 50 points in slippage, and you don't think that's possible? Oh, it's there.
It's tough.
50 points, just like this. That's $1,000 times your 8 contracts. You just lost $8,000.
Damn.
And you're going to tell me that you can open up an account with $10,000, whatever, and you're going to trade multiple minis because the discount broker allows you to. And all of a sudden, you just roasted your account in one trade, in some wild little price move that came out of nowhere that you didn't expect. And in one candle, 1 minute candle, it just smoked your account just like that. There's teachers out there that are promoting the idea that that's a good idea. It's not a good idea, folks. $10,000, that's the absolute minimum. And I don't think it should be that. I think it should be a little bit higher than that. I think 15,000 is fair for what the NASDAQ is doing right now, because just today alone moved 8,000 per one single contract, over $8,000 in movement for one contract. Now that's, top to bottom, and likelihood of you being in that move is probably, obviously not likely, but the measure of risk needs to be appreciated and respected. And unfortunately, YouTube makes it available for anybody to come out here and pretend to know what they're doing. And unfortunately, if that person isn't skilled, if they don't really do what they say they do, or teach proper risk, or to teach you to respect the level of risk that's required to trade these markets, they're doing you a disservice. And that's the number one reason why I taught for a long time with a demo and still teach with a demo, because number one, legal reasons. I'm not trying to be held liable because I'm not licensed to give trade advice, but it's not trade advice in a demo account. You're not making or losing anything. It's fantasy football with price charts, but you can learn how to read price action with it. This year, I've been showing you a live account. That's real. I'm not teaching through that. Notice that? Okay. At the end of the year, I'm going to share with you what that account has done. I'll be 100% transparent. I will show you line by line every single trade from every single trading day of every single trading week of every month. You'll see it. Okay. Throughout the year, I'm going to be teaching lessons about certain things, and you're going to see them applied when I share the entire history with that account. So it's more meaningful, because there's a lot of you in the comment sections that are trolling. And I know what you're here for, but I'm going to give you undeniable proof, just like the rest of you. That way you can see the lessons I'm giving you. Yes, they worked in demo, but they're actually being utilized in live fund trading by me. It's after the fact, so I cannot be accused of giving you trade advice. It's what I did with my real money. See the difference there? It is what it is. If you don't like this teaching style, there's other people out there teaching all kinds of great stuff. Doesn't mean it's profitable, but they got all kinds of neat stuff to look at. I'm teaching you how to read price. And I need you to be sober-minded about the level of risk that these markets provide us, because it can take you out quickly. So I got questioned by, I don't know, 6 or 7 of the people. Some of them are actually my students in my mentorship, and others are just people that are on the internet. I don't know if they're just YouTube or if they're just trading view people that try to follow me on there. But they asked, could I showcase what I would do with a $10,000 hypothetical account if I was using a discount broker? In other words, a broker that would let me trade with, I don't know, like $2,000 or $1,500 per contract, something to that effect, for a NASDAQ mini contract. Number one, it was crazy trying to find some of those setups, because to frame the risk in it and to do big lot sizes too was very challenging. But I kept it low end. It only took me 2 weeks to do this, but you can see I put a heavy-handed short up here using what I'm teaching you here, and then aiming for those relative equal lows, which is that 14,381 level. This is my trading view account. Now, you're going to hear people say, this is Photoshopped. Oh, you Photoshopped this. No, I did not. I don't need to Photoshop this.
Nice.
In fact, my live mentorship with real students that paid me, they're going to see me show this live, and it's going to move all around. It's not edited. I'm going to log out of the account and log back in. So it's not me doing any kind of editing. It's not MT4 servers or anything like that. You can play around with it. It's not Ninja Trader where you can go in there and take a bad trade out and make it look good. All these things here are executions. Okay, and you can see there's 3 losing trades there on the 14th. And where is You can see today's trades all up at the top. And that was me doing a heavy-handed, quant style, heavy-handed short, and then taking partials as it was going down into that level of 14,381. Looking at this is your classic, the guy shows you the results, okay, shows you, this is what I did with my demo account. They may lie and say it's a real account. This is clearly a paper trading account. You can see it, it's there, it says it right up here, paper trading, okay? Paper trading, this is all paper money, okay? I started the account with TradingView at $10,000, okay? And that was on February 3rd, just 2 weeks ago, to the day, okay? So 2 Thursdays ago, I started this and set the account to start with $10,000. And I started trading it, and you can see the positions here with just the NASDAQ, okay? I'm not doing anything with like Forex to make it go up. I'm not trying to pull out bonds. I'm not trying to do anything like that. I'm showing you just the NASDAQ. Starting with $10,000 in 2 weeks, using, again, the limitations of, well, I don't want to say limitations, the pseudo benefit of a discount broker. What could I do in 2 weeks doing that? And using what I'm teaching you too. That's the difference. I'm literally teaching what I'm showing here. I just showed you the example of it in the chart before. This is the equivalent of 582% in 2 weeks. Now, it's hypothetically done in paper trading, yes, but with the perspective of a hypothetical discount broker margin being used. So whereas I'm trading with TD Ameritrade right now, and they require me to have almost $22,000 to trade one contract, I don't have a problem with that because of the level of volatility that's in there. It just makes it easy for me not to worry about it. Like, I'm not worried about it. I know I got plenty of margin. I know I got plenty of equity. If I get banged by something coming out of nowhere, say Russia goes into Ukraine or China invades Taiwan or something crazy comes out and it causes the market to go nuts, because I expect that to be coming anytime now, it won't smoke my account. Okay, I'm not gonna blow the account. I guarantee you this account's not blowing. Okay, and I'm showing, in my opinion, what it would be like for someone if they ever got to the point where they put years into developing their own model. Now, that doesn't mean you can't find profitability before that, but after you've done it for a while and you found your own niche of what you want to do with the content I'm teaching you, you'll find your own groove. And once that's done and you can formulate a well-written model on paper where everything is outlined, when do you buy, when do you sell, where do you put your stop at, when do you move your stop, how many contracts do you trade, what constitutes a day where you don't take a trade, all those types of things. I will teach you those lessons in this YouTube mentorship, okay? A lot of you also are very, very excited and you're like, okay, I see you doing this, but I'm not really learning anything new. I'm disappointed. I'm not done. You can give me those complaints after I say I'm done, okay? But I'm giving you gold. Like, this is something that you can go out there and turn in these markets and really develop a skill set that could completely change your whole entire direction in your life. I'm not promising profitability. Notice that? See that? I'm not promising that. I'm not promising you a 6-figure income every year. I'm not doing that either. I'm telling you that you will love price action because it repeats. It's something that's, well, it repeats. And if you know something's going to repeat, it's familiar. And things that are familiar are comfortable. Right now, you don't know what these patterns are likely to do. They're unfamiliar to you. So it's important for you to understand that that's a temporary struggling point. But going through the things I'm going to teach you to do here, and I'm streamlining it. Yes, this doesn't feel like streamlining to some of you. You want me to come in here and say, this is where you buy, this is where you sell. You put your stop loss right here, and this is where you take your profits. And it's always like this every single time. Wash, rinse, repeat, and it never violates any of those rules. And it's just always the same way. If you think that way, just change this channel right now. Don't even come back here, because that's not reality. There's going to be similarities that look slightly different than the last few times you took the trade, but you will recognize them. But my question to you is, if you could do this over a year, not 2 weeks. Would you be impressed with yourself if you could do that?
Hell yeah.
Would you feel that it would be enough?
Hell yeah.
Some of you young guys don't think that this is enough. And it's
Hell yeah.
amazing. That type of return is amazing. If you can turn that with a live account, that's phenomenal. Like that's wealth making there.
So that's somebody's yearly.
You don't need it to be that high to make money. But if you can hit that kind of number a year, over 12 months, hit something like that, that's amazing. And that's not even what I teach my students to expect. And this is not bragging. I'm not trying to say, look at me, I can trade a demo account, look at me. That's not what I'm doing here, folks, okay? I was asked sincerely to show. You all hear me telling you, and I'm showing you, it's a paper trading account. Because I'm not gonna go into AMP or some other broker that's gonna allow me to trade with discount broker margins. I'm not gonna do it. I know, even what I know, I'm gonna get smoked if I try to do something crazy and heavy-handed. Because even with me trading one contract, I've had moves come against me pretty sudden. And there was nothing I could have done about it because the volatility is so fierce right now. I'm not afraid of it, but I do absolutely respect it. So to provide a answer to the guys out there that say that, yeah, it's stupid to trade in another account where they use the exchange rate margins for initial margins, which is right now almost $22,000 for the NASDAQ. One mini contract, you need about $22,000. It was about $17,160 about 3.5 weeks ago, 4 weeks ago, but they raised it up. If they raise the margins, this is for your notes, okay? If they raise the margins, that's the exchange tipping their hand to you that huge moves are coming. Big. Big, monstrous moves are coming, and he just raised the margins. You think that's coincidence? It's not. Big moves are coming. And if you're offside, it's going to get real hot in the underpants. But if you're onside, it ain't nothing sweeter than that. That's like winning the lottery. And these moves are significant. I mean, let's go back up for a second, okay? And I'll close this video. If you look at the fair value gap in here, okay, and say you're filled at 14,515, and you're aiming for 14,381, is that 6.5 points? No. Is it 20? No. Is it 50? Mm-mm. Is it 100? Nope. It's more.
It's more.
Do you see a pattern here? One contract? Folks, what I'm teaching you is literally a ATM machine in your hands. I'm giving you the PIN numbers. Every time I do a video here, I'm giving you another digit. And once you figure out what digit you want to do with this content and make it part of you, and you'll see what I mean by that. Right now, you might see me showing you. It's like, man, this makes perfect sense. Most of the comments that I don't allow to be posted are just sugar, sweet, diabetic coma type lovey-dovey comments. And I'm not making fun of that. And I appreciate it. I know what you mean by it. And you want to show your adoration and respect. And I love that. But don't lose sight that you're feeling that splash over because I'm literally taking you into the chart and showing you what I know. And you're excited because you know the opportunity is available to you if you stick to this. And that's the right perspective. But don't lose sight and think that, oh, I just watched that video and I'm going to go out there and trade. Because I've had some people post in the comment section and they try to do something with live accounts, which I already said, no, don't do that. And they're saying, I don't think these concepts work because I tried to do this and I tried to buy this fair value gap today. And you know who you are. And I'm not trying to make fun of you. I'm not talking down to you. But the bias is bearish. So if the bias is bearish, would you go in looking for a bullish fair value gap?
Hell no.
That's the purpose of having a model. And then with that model, each morning, before the markets even start trading, you write down what your intentions are. What does that mean? I gave you the range, right? Here's the opening price. It rallies up to that. So inside that range, you're going to look for a setup to go short. You're bearish. And if it goes down below that low, you can still take a short if it's in this range minus this low. Okay. If it leaves that area, you can't chase it. I don't care how good it looks later in the day. You don't do it. You have to have discipline, folks. If you don't have discipline, your broker's not going to help you with that. They want you to click that button. That's how they make money. And they don't care if you blow your account, because there's going to be 20 more to replace you, because they've watched ICT videos. They've watched everybody else on YouTube that try to tell you that you can do this. And it's so easy. Even a pizza delivery boy can do it. So hopefully this has helped clear up the idea of bias and power 3. And
Definitely.
I will be repeating these themes when it's applicable in the newer videos that come out and examples I'm going to teach with. But for now, I can't say it enough. What you were just exposed to, that is the underpinnings of what we do in my camp, okay, ICT. My students, we look at price like that. Let me throw one more thing in here, just to piss off everybody that doesn't like these long videos. Let me go back up into this area real quick. And on the daily chart with the candlesticks, that's what I'm looking for here. Here we go. All right, notice something. From this low up to this high, it's bullish.
Straight buyers.
Okay, we're expecting bullish prices. This is how you back test. You tell yourself in your annotations, I was expecting. You're basically lying to yourself in the comments of your chart when you're back testing. It sounds foolish. Okay, trolls are going to love that comment coming out of my mouth. But what you're doing is you're teaching yourself pseudo experience. It's training your subconscious to see this stuff like you saw it live. And when you record it on the chart in your own annotations and you log it and you keep it in your journal, and on the weekends, you go back and look at your Monday, Tuesday, Wednesday, Thursday, Friday, and you look at the previous week. And you start looking at these patterns and how it repeats over and over again. When it's bullish, you're trying to stay with the opposite of this. Open near the low, close near the high, but expansion to the upside. So you accumulate longs, manipulate, get people thinking it's going to go lower, and then ram it up higher. Distribute the longs near the close. That's what you're looking for here. With that mindset, okay, you're all afraid of, but what happens if it's a down day? ICT, what happens? Well, the worst thing that can happen is you lose money. And if you think that you're going to trade and not ever lose money,
you're tripping.
Turn the videos off. Don't ever watch anybody else's either, because that's not a proper mindset. Traders are professional losers. They're managing every trade right from the beginning. They got to come out of the costs. You're paying a commission. If you got slipped in Forex, you got a spread. Every trade opens up as a loser. So a trader is a professional management company of losing trades. They turn losers into winners. But not every loser can be turned into a winner. But they don't lose their business because a few never become winners. It's real important to understand that, folks. It's a paradigm shift that took place when I was a younger man. I felt that there was a way for me to always win. I was convinced of it. There isn't. There is no way of doing that, okay? So last analogy, last lesson, and the video is over. If we're bullish here, okay, we're expecting each candle to expand higher. So in other words, to close be higher than the opening on each individual candle. My up candles are green. How many black or down close candles do you see in this price run? 2. Wow. How about this price move here? It's going lower, right? Going down for the sell side here. You're bearish. But what happens, ICT, if it goes up? You'll probably lose money. But let's count how many up close candles we have. 1, 2, 3,
5,
4,
6.
5. Look how much range it moved. If you can't have a model that weathers Say you got a losing trade each one of those days. If that blows your account, you're not managing your risk properly. You're over leveraging or over trading. See how easy that is to deduce your problems? It's simple stuff, folks, but you're scaring yourself. You're overthinking things. You're listening to me talk about multiple concepts that will come together in a few weeks, but you're overthinking everything. And you're trying to assume just because you watched a few videos and you're thinking foolishly that just by watching a few of these videos, we're only in episode 10. 10 episodes. And some of you think you can go out there and own the world now. I understand it's empowering information if you've never been introduced to it, but you're not going to own the world up to episode 10. Okay, you're not going to do that. You're going to lose money if you go out there and try to rush to try to do this stuff. There's a lot of things we still have to cover. And you haven't even back tested enough. I haven't even been teaching it long enough on YouTube for you to even have a backlog of data to draw experience from. So think about that, okay? Trust me when I tell you, folks, these moves repeat all the time. All the time. And don't feel like you're missing out because you're not doing it right now. Put that feeling aside. Make this fun while you're learning it, and it'll never feel like a job or a tedious task. That's going to be it for this one. Hopefully it was insightful to you, and until I'll talk to you next Tuesday, enjoy your weekend and be safe.
All right, everybody, that about wraps it up for today's video. If you did enjoy, please leave a like, subscribe, comment, all that good stuff. Appreciate everybody taking the time to watch this video. I know it was a little all over the place. My mood kind of changed towards the end. Just got some stuff going on. But yeah, I do appreciate everybody taking the time to watch this video. Hopefully you learned something, because I know damn well I did. Hope everybody's writing some notes. But I'll see you on the next one. See y'all tomorrow morning. Peace out.